Ever wonder why you freeze up or make impulsive decisions when the market gets wild? It's not just about charts and numbers. Your brain is actively working against you. Discover how understanding the neuroscience of risk can transform your trading strategy, turning fear into focus and impulsive mistakes into calculated wins. Stop leaving profits on the table because of your brain's ancient wiring. This isn't just about managing risk. It's about mastering your mind to unlock unparalleled trading success. Learn how to retrain your brain's response to uncertainty, allowing you to execute with precision and capitalize on opportunities others miss. The neuroscience of risk is your ultimate competitive edge. Let's be honest with each other for a moment. You know the feeling. You have done the analysis, the setup looks perfect, and you execute the trade. But then, the candle ticks against you. It's just a few points, nothing that violates your stop loss yet, but suddenly, your physiology changes. Your palms start to sweat, your heart rate spikes, and your breathing becomes shallow. A frantic voice in your head starts screaming at you to get out immediately to save what you have, or worse, it begs you to double down because the market has to turn around. You aren't stupid, and you aren't bad at math. You are simply a human being trying to perform a modern, complex financial task with a brain that hasn't had a software update in over 100,000 years. To understand why we fail at trading, we have to look at the architecture of the brain, realizing that we are not rational beings who feel, we are emotional beings who occasionally think. The core problem lies in a biological conflict between two specific parts of your brain that are constantly fighting for control. On one side, you have the prefrontal cortex, the CEO of your mind. This is the area responsible for logic, planning, risk ratios, and your trading plan. It is the you that studies charts on the weekend and promises to be disciplined. On the other side, you have the amygdala, the primitive bodyguard. Its only job is to scan for threats and initiate the fight or flight response to keep you alive. The fundamental issue is that, to your amygdala, losing money feels exactly the same as being chased by a predator. The brain processes financial loss in the same neural pathways as physical pain and mortal danger. When the price moves against you, the amygdala perceives a threat to your survival and literally hijacks the system, cutting off blood flow to the prefrontal cortex. This is why you freeze. This is why you forget your rules. In the heat of the moment, you are biologically incapable of thinking clearly because your inner bodyguard has locked the CEO out of the office. It isn't just fear that destroys trading accounts. If fear were the only enemy, trading would simply be scary. The more insidious enemy is the chemistry of addiction, specifically the role of dopamine. We often think of dopamine as the pleasure chemical, but in the context of trading, it is actually the anticipation chemical. It is the driving force behind the hunt. When you see a setup forming, your brain releases dopamine, making you feel excited and focused on the potential win. However, the human brain loves variable rewards and certain outcomes more than guaranteed ones, which is exactly why gambling is so addictive. When the market is volatile, your dopamine circuits are firing rapidly, creating a state of high arousal. This chemical state creates a dangerous trap known as the reward prediction error. When you win a trade, you feel a surge of invincibility, but when you lose, your dopamine levels crash below their baseline, leading to genuine psychological pain and a desperate physiological need to get back to normal. This is the neurological basis of what we call revenge trading. Revenge trading is not a strategy, it is a withdrawal symptom. Your brain is screaming for a dopamine fix to counteract the pain of the loss, causing you to abandon your plan and trade recklessly. You are no longer looking at the chart for logical entries, you are looking for a relief valve for your own neurochemistry. Because our brains are designed to save energy and keep us safe, they rely on cognitive shortcuts that, while useful for survival, are devastating for trading. The most powerful of these is loss aversion. Neuroscience tells us that the pain of a loss is psychologically twice as powerful as the pleasure of an equivalent gain. Losing $1,000 feels twice as bad as gaining $1,000 feels good. This imbalance causes you to hold on to losing trades for too long, hoping they turn around to avoid the pain of realizing the loss while simultaneously causing you to cut winning trades too early to secure the safety of the win. You end up trading not to win, but to avoid pain, which is a guaranteed recipe for failure. We are also plagued by recency bias and confirmation bias. Your brain gives far more weight to what happened 5 minutes ago than what happened 5 months ago. If you took 3 losses in a row this morning, your brain perceives the current market as dangerous, causing you to hesitate and miss the perfect setup. Conversely, if you just had a big win, you perceive the market as safe, leading to recklessness. Once you are in a trade, confirmation bias kicks in, and your brain starts filtering information, subconsciously ignoring news that suggests you are wrong and hyper-focusing on the one indicator that says you are right. You stop being an analyst and start being a cheerleader for your own position, blinded by your own biology. If the story ended there, it would be depressing, sounding as if we are genetically doomed to fail. But there is good news found in the concept of neuro. The brain is not fixed. It is plastic, meaning it can reorganize itself by forming new neural connections throughout your life. You can rewire your response to risk. You can train the amygdala to stand down and strengthen the prefrontal cortex so it stays online during high pressure. We are not trying to eliminate emotions, as that is impossible, but rather to build a gap between the feeling and the action. We need to move from being reactive traders driven by fear and greed to responsive traders governed by logic and planning. To do this, we must adopt a new way of operating that speaks the language of the body to control the mind. Let's walk through what this transformation looks like in practice. Integrating the physiological hacks and cognitive reframing into a continuous daily flow instead of a checklist. Imagine this as the new narrative of your trading day. It begins before you even open your charts. You sit down at your desk and perform a self-audit, checking if you are tired, hungry, or stressed, knowing that these physical states weaken your decision-making ability. Before looking at price action, you engage the vagus nerve through a specific breathing pattern, inhaling deeply for 4 seconds, holding for 4, exhaling for 4, and holding for 4. You do this for a few minutes because you know that long, slow exhalations physically slow down your heart rate, sending a biological signal back to the brain that says you are safe and not being chased by a predator, which forces the prefrontal cortex to come online. As you begin your analysis, you shift your mindset from predicting the future to assessing probabilities. You remind yourself that you need to know what is going to happen next to make money. When you spot a setup, you don't just click the button. You visualize the potential loss first. You close your eyes and imagine the trade going against you, imagining the feeling of the loss, and then visualizing yourself calmly accepting it. This acts as a vaccination for your brain. So if the loss does happen, your amygdala isn't shocked. When you execute the trade, you verbally state that you are relinquishing control of the outcome and only controlling the risk. During the trade, if you feel your heart rate rising, you physically look away from the profit and loss column, knowing that the flashing numbers trigger emotional value while the chart structure triggers logical analysis. Finally, regardless of whether the trade is a win or a loss, you physically stand up and walk away from the screen for 5 minutes. You do this to reset your dopamine levels, preventing the God complex after a win or the revenge urge after a loss. You splash cold water on your face to trigger the mammalian dive reflex, instantly resetting your nervous system. You treat your biology with as much respect as your capital, knowing that maintaining a neutral chemical state is the only way to ensure the next decision is made by the CEO, not the bodyguard. We spend thousands of dollars on indicators, courses, and fast computers, but the most sophisticated trading machine in the world is sitting between your ears. The problem is that it came without a manual, and for years you have been operating it on default settings that were designed for the savannah, not the stock market. Understanding the neuroscience of risk doesn't mean you will never feel fear again. It doesn't mean you will be a robot. It means you will understand that fear is just biological data. It is a signal, not a command. You now have the tools to intervene. You know that when the freeze response hits, you need to breathe to signal safety. You know that when the urge to revenge trade hits, it's just a chemical withdrawal that requires a physical break. You know that consistency comes from strengthening the prefrontal cortex through daily practice and discipline. The market is a sea of uncertainty, and you cannot control the waves, but you can learn to control the ship. Stop fighting your biology, start hacking it, and use this new understanding to build the trading career you deserve. The next trade is just a probability, but your reaction to it is now entirely within your control.